Hi, good afternoon, and thank you for joining us. I'm Whitney Thomas, head of the corporate finance team at Triodos Bank. We help social and environmental organizations to access the capital they need to grow, and we structure investments that we promote on our own crowdfunding platform. I'm joined today by the senior management team, who are also executive directors of Thrive Renewables. We wanted to give you an opportunity to meet them and ask questions about Thrive and their work. So before we start, we would love to know whether you've heard of Thrive, and my colleague Martha is going to launch a poll. So it would be great if you could answer the very straightforward question that's going to pop up on your screen. As many of you know, Thrive Renewables is currently raising capital through a share offer. Information on the offer is available on the crowdfunding platform, and the offer document is available for download once you register. So before we start, I just need to draw your attention to a few things. Investing comes with risk, and that applies to this share offer. Dividend payments aren't guaranteed, and the share price can go down as well as up. So it's really important that you read the offer document in full before you decide whether this is appropriate for you. And if in doubt, you consult an independent financial advisor. Nothing that you'll hear today in this webinar constitutes financial advice. So we're going to kick off with the team introducing themselves, and I'm going to ask a few questions to each of our guests to get us going. Just so you know, we are joined by the finance director today, Katrina, but she's having technical difficulties, so she's not able to join in the audio. Now, there's a Q&A function on your screen, and we would love for you to start submitting your questions through this function on the right-hand side. And what you can do is you can like other people's questions if you're keen to get an answer to them. And we will try to prioritize those questions that are the most popular ones to make sure that we can get through those first. And if we can't get through everyone's questions today, we'll also make available the email address for the corporate finance team so that you can send any follow-up queries through directly to us. We'll make sure we wrap up by 1:30 at the latest. Now, I think we're going to close the poll, and the first thing we're going to do is to show you a 90-second video that will tell you a bit more.
The climate emergency is confronting humanity in a way we can't ignore. At Thrive, we've been taking action since 1994. We provide the funding and expertise to get projects like this up and running.
With Thrive, you can take direct action towards our energy transition. We represent a community of thousands of people that are making an investment that's making a difference. Thrive puts your money to work, putting power into the hands of the people. The more people that join us, the more sustainable energy we can generate. The less fossil fuels will be burnt, the cleaner our air will be, and the more affordable energy can become. The power we produce generates environmental, social and financial returns for our investors. Together, we're creating cleaner, smarter energy.
Things are changing. The UK is now generating almost half its electricity from renewables. It's time to act together and make it 100%.
Excellent. Thanks very much for that. Right, so the first thing I'm going to do is I'm going to hand over to Matthew, who's going to give a brief introduction, and then I'll let him hand over to Monica for another introduction before we kick off.
Thanks, Whitney, and hello, everybody. Hope you're not melting at your seats this afternoon. So my name's Matthew Clayton. I'm the Managing Director of Thrive. I joined the team in 2006 as Investment Manager and have been busy on the board of Thrive and as the Managing Director since 2010. Prior to that, I worked in risk management in power trading and then moved into carbon trading to pursue my environmental interest before joining Thrive. Monica?
Matthew. Hello, everyone. Pleasure to be talking to you today. I joined Thrive Renewables in 2007, so 15 years ago, when it was still managed by Traders Bank. I joined on the administration side, and then I grew almost with Thrive, working on new projects, and my role now is investment director, and I focus on finding new projects and taking them through the investment process and making sure that we manage those projects once they are operational. Working with the team, the investment team now is 4 people, which is great to have more of us focused on growing Thrive. So yeah, I look forward to the discussion later today. Thanks.
Thanks, Monica. Matthew, would you like to say a few words about Katrina, since she's having audio problems?
Yeah, this is going to be tricky, but having heard this a few times, Katrina is our finance director, and she's been with us for probably about 10 years. Prior to that, she worked as a finance director for an environmental waste management business, and she's a trained accountant, I think originally trained with Cooper's Lybrand. I don't know if there we go. I've heard it a few times, but never had to say it.
Great, that's great. Thanks very much for introducing yourselves. I've also got a colleague of mine on the call, Rich, and he's going to help with some of the Q&A at the end. So we're going to spend just a few minutes. I'm going to ask you all some questions to get us started. You may have seen from the poll, great today, you've got about 68% of the people on the call are already Thrive investors. So that's really great to hear. There's a lot of knowledge already in the room, but clearly still about a third of the audience that aren't. So I am going to start with a few kind of basic questions about the company. So the first one is for you, Matthew. Thrive's been operating for almost 30 years now in the renewable energy sector. Why was it originally set up? It was obviously set up originally as part of Traders Bank, and what was its purpose?
Okay, thanks. So yeah, the real impetus for establishing Thrive back in 1994 was, and it was then called the Wind Fund PLC, for those of you that go back that far, was really in response to the Chernobyl nuclear disaster, and really that Triodos saw that people really wanted to do something to bring about change to the energy system on the back of that. And so, yeah, the real founding principles of the company, which are very much still part of the way we run the business today, was on one hand to change the energy system, so to build renewable energy projects in the UK, then to help transition away from nuclear and coal, and now to transition towards net zero and carbon neutrality as a country. But the other really important part of our mission and reason for being, which perhaps differentiates us more from other infrastructure businesses, is that we're really, really keen to allow or provide a vehicle that individuals can do something direct about climate change. So we currently club together about 6,000 investors, a community of 6,000 investors who've invested in us, and we've gone out and deployed that money into renewable technologies. So we've now built or funded 140 megawatts of renewable energy projects and storage projects around the UK. And I don't think there's that many businesses that could be founded so long ago with a mission and a vision, which has remained so relevant and actually become more important throughout the life of the business over that period. So yeah, so that's us in a nutshell.
Great, thanks for that. I mean, obviously the renewable energy market has changed a huge amount. When Thrive was originally founded as the Wind Fund, renewables represented 2% or something like that of the energy market. Now it's almost 50%. So what are you doing as a company to kind of make sure that you stay, that you're staying relevant and that you're adapting to the changing market?
Yeah, so yeah, I think that the really important thing that we're doing, as we said, was that we're allowing individuals to invest directly into new renewable energy projects. And just to put some numbers around what the energy transitions look like whilst Thrive has been in existence, as you said, when back in the 90s, then renewables were providing about 2% of the UK's energy. Now we're hovering around the 40% of renewables electricity supply coming from renewables. And what's really important about those figures is the carbon content of the power we're consuming. So effectively, the carbon content of the power we're using every day at home now is about a third of that it was in the 90s. So yeah, it's really good progress. Every unit we're using at home, we're creating a lot less impact generally. And then there's been energy efficiency gains as well. So, but I guess what's really interesting standing from here, looking forwards, is that despite all the improvements with energy efficiency, and the consciousness that goes with that, the LED light bulbs, better domestic appliances and everything else, we're still anticipating 2.5-fold increase in the electricity needs in the UK over the next 20 years. And that's principally driven by the transition of the heat and transport demand, which is principally provided by petrol, gas and diesel at the moment, to electricity. So we expect, as part of achieving net zero, that our homes will be heated using electricity, and also that transport, both rail and road transport, will be the majority of that will be electrified as well. And to achieve that transition, we need a 4-fold increase in the amount of renewables on the grid, which is a colossal transition to deliver. And so Thrive plays quite a modest role in that. We're not a utility, but what we think is really important is that we allow individuals to do something about that and really contribute to that change. And one figure which I find fascinating in terms of sort of contextualizing the kind of scale of growth that we need to deliver is that each electric vehicle that's bought and rolls out the showroom represents about a household's worth of electricity consumption annually. So it's almost like doubling the housing stock if you have an EV parked outside of every house. So just gives you a feel for that. And in terms of actually delivering net zero, then we anticipate, or we've sort of calculated that the UK needs to build about 6 gigawatts of new renewable capacity every year for the next 20 years to achieve net zero. And the best years we've had in the UK, we've delivered between 4 and 4.5 gigawatts of new renewable capacity, and that was in 2015 and 2017. And unfortunately, last year we only delivered 1 gigawatt of the 6 gigawatt that's required. So there's plenty of work to be done, and there's plenty of projects coming through the planning pipeline for us to invest in and build new projects.
And just for clarity, when you said we, you mean the renewable energy sector, obviously not Thrive on its own.
Yeah, we can't do that solo, I'm afraid. But,
because that's obviously quite a large scale. I mean, one thing that's really changed, I think, within your portfolio, clearly you own and operate quite a number of wind assets, so that's onshore wind. You've also started investing in some new technologies, and so this is a question for Monica. Could you talk us through some of the different technologies that you've invested in over the last 4 to 5 years?
Mm-hmm. Thank you, Whitney. It's a good question, building up on what Matthew was talking about from the energy, industry perspective. We very much are going through a huge transformation of what the UK energy system will look like in the future. And responding to that, we will see more renewables on the system, but to grow renewables even further, we need to see new technologies such as demand-side management, battery storage, and other things. So this is why we as Thrive are looking at, what the future system will look like, and almost creating a microcosm of that and trying to invest in projects within those different new technologies that are emerging. So in addition to wind and solar and hydro that we've always been building expertise in investment in, we've also started looking at battery storage. So we're just building our second battery storage project. The first one is already built and operational near Milton Keynes, project called Wicken, and then the construction project on Feeder Road in Bristol. So that's it's really useful for us to see how these projects could work. Sorry.
Yeah, and sorry, before you move on, I mean, for the lay person, can you explain in really simple terms how a battery storage project works?
Yes, it was quite a journey for us as well, because it's totally different to what renewable generation is that we were used to. So the way it works is basically the batteries are able to store electricity from the grid, so effectively importing from the grid to the battery storage system, and then export back to grid at times when grid needs the batteries most. That's one function. Another function is that the UK energy system, or any electric system, needs a frequency to be at a stable level. If it changes, then this could cause blackouts and things like that. So this is why one very important role for the national grid is maintaining frequency at one level. So batteries also provide a very useful role with providing that frequency services. It's basically almost like flicking, for a couple of seconds, that electricity is kind of going into the system just to bring that frequency at the right level. So it's those two kind of aspects. And then how we make money? Well, it's by providing those kind of services that we we help the grid to balance, and then we make revenues from providing those services. So batteries, in terms of other technologies, we also have been investing into a geothermal project in Cornwall. This is also, we feel, very important. It's a wonderful resource we have in UK, that we've got those areas where there is a very hot granite in Cornwall, so making the most of that. Interestingly, when you are looking at the geothermal brine, which is the water in the ground, that also contains high levels of lithium. So there's potential as well for, with the net zero kind of transformation, also having a UK sourced lithium. Another technology that we've been looking at is something that's already well established. It's a rollout of rooftop solar. So basically, commercial buildings, factories, offices, and so on, installing rooftop solar on their premises, and so they can use electricity from those installations and having access to a lot cheaper electricity, which is really important, especially now, given the level of energy costs that we all at homes and businesses experience. So we've been also investing in that, and we see a huge growth potential in the private wire sector.
Great, thanks for that, Monica. Just as a reminder, it's great to see we've already had quite a few questions that have been submitted through the Q&A. So thank you for those. Please keep them coming. And then if you could go through and just like any questions that particularly resonate with you, that's just going to help us prioritize them towards the end. Another question for you, Monica, is how does Thrive consider in its investment decisions the embedded carbon in these different technologies? So just as a very kind of simple example, it takes a certain amount of energy to make the wind turbines, what happens at the end of their useful life, and likewise for the solar panels and some of your other technologies.
Mm-hmm. Thank you, Whitney. Yes, the sustainability of the technologies does matter, and we said before, we've always been proud at Thrive that we're doing the right thing, not just for the profit but also for the planet, and we very much live by that. Yes, we look at project sustainability kind of aspects when it comes to the carbon that's almost embedded in the technology, in the production process of these technologies. We also look at wider social and other kind of aspects of projects. Not just that, but yeah, coming back to the CO2 and the carbon kind of aspect. That's partially why we have invested a lot in wind turbines, because out of all the different technologies, wind turbines have a very, very, very small carbon kind of content within those. We usually say within 6 months, you probably of operation of wind project, you probably almost kind of made up the carbon that was used in its production, and so then the rest of the turbine life is carbon free effectively. and very much the scaling up of solar and batteries as well. Those are also getting, those proportions are getting also quite relatively small, given the amazing saving of carbon that you gain by having electricity from these resources. It's uncomparable, obviously, to coal or gas or other kind of technologies. So yes, we look at that, Whitney, and also on the other aspects, such as where the equipment is coming from, how is it manufactured, how is it sourced. These are very important issues that we consider.
Great, thank you, Monica. The next question is going to be for Matthew. Can you tell us just a bit more about how Thrive as a company is run from a governance point of view? And then maybe also touch on, because we were talking about sustainability, Thrive Renewables is a certified B Corp, as is Triodos Bank. So do you want to also kind of touch on the B Corp certification and why that was really important for you as a company to go through that certification?
Yep. Okay. Thanks. Well, I think the governance of the business is really important to us because we're acutely aware that there are individuals entrusting their investment with us. We're not just a business to business type organization. So and our investor base is, I think our smallest investor has invested £5 in us. The largest investors invested about £5.5 million in us, and we've got everything in between. So the governance at both ends, from the impact investment funds at the large scale to the individuals, is really important. So to that end, we decided to adopt what the Quoted Company Alliance code, governance codes for small to medium-sized listed businesses. And whilst we're not listed, we can apply 95% of that code to our operations and the way we do business. So we've got a really solid structure that we adhere to. We have a non-executive board. So the board is made up of the 3 executive directors, Katrina, Monica, and myself, but also 5 non-exec directors who represent different parts of or different sectors which we feel are relevant to Thrive. So we've got an engineer who's been working in the renewable sector since it began to make sure we know what we need to know on the operational side. We've got someone who's really deeply ensconced in the ESG investment space. We've got accountants or people with accounting experience who've been working in the energy industry for 30 odd years. And so we try and bring together the third eye, if you like, for our operations through the non-exec participation to bolster what we've got as an executive team as well. So that's really important to us. And we kind of see that, in terms of our performance, we measure it very much in 3 ways. It's the financial performance, and that's obviously critical to demonstrate sustainability, but that environmental and social performance is also really important, because we feel that's good risk management. Because I think if you're not performing environmentally, then you've got to question your long-term business plan, and if you're not performing socially, then you've got to question how you're relevant, I suppose. And that led us to, with a great deal of interest, to look at the B Corp certification journey, because we felt that a lot of the B Corp principles, which are really around the wider stakeholder performance, I guess, beyond the profit, beyond the bottom line performance. So we went through that B Corp qualification process 2 years ago now, and we're delighted to be certified. And then later, or in early 2021, B Corp notified us that we're actually qualified as best in world, which means that we're one of the top within the top 5 environmentally performing B Corps globally. And then, funnily enough, just last week, we were told that we've held that position for another year. So I think that really reflects that we exist to try and do the right thing, both environmentally and socially. And I think that the reason the B Corp, we haven't had to change anything to be a B Corp, though it's really helpful to have going through that process gives us a few ideas about how we can improve and how we can change and implement different policies and that kind of thing. But we felt it's really helpful to get that third party certification so that investors understood what we stood for, rather than just hearing it from us, I suppose.
Yeah, yeah, absolutely. Thanks for that. So two more questions, and then we will move on to all the questions that come in from the attendees. So the first one is again for you, Matthew, since Katrina can't feed in herself, is around the share offer. Why are you raising money now, and what are your plans for the investment?
Okay, thanks. So yeah, as Thrive, so Thrive has two choices really. So we can grow. Our principal source of revenue is the sale of the electricity, and we've been profitable for most years of our operation, and so we can retain part of that profit and distribute part of that profit as dividend to our investors. And what we're keen to do is to provide us a solid return to our investors. And obviously there's probably financial rules around me saying that, so perhaps Whitney can let us know how we should characterize that. But anyway, there's a balance to be struck between providing dividends to investors and retaining capital to invest in new projects. And where we are is we've fully deployed the capital that we've got in the business at the moment. So we've committed the capital into new investment projects, and we could grow organically and continue to grow organically. But our sense is that that there's an urgency around climate change and around the energy transition. So we're keen to grow faster than we could do if we just grew organically, which is why we're coming out to raise more money so that we can invest the money into new projects. And in terms of the new projects and the pipeline that we're looking at the moment, it's very much a continuation of what we've been doing to date. So the capital will be invested in sort of one of four areas. It will be new renewable energy projects, grid connected renewable energy projects, principally solar and wind currently in the pipeline. And then the second area is the private wire renewables, which is what Monica was describing, where we build a renewable energy project as a solar rooftop to an industrial plant, or a wind farm in the grounds of an industrial plant, and then we provide that industrial host with our green energy, which stabilizes their energy costs and also provides them with the green credentials, which keeps them in their supply chain. We also have more batteries in our pipeline, so we could be investing in batteries with the new capital we're planning on raising. But also an area which we see as really important is to keep supporting the community energy groups. So we've now done four of what we call community energy funding bridges, and this is where we can bring our capital and expertise to a community energy project to accelerate it and make it happen sooner than it would otherwise, or indeed making it feasible today. And I think the most recent example of that would be the ACE, so Ambition. We've been working with Ambition Lawrence Weston. They are a very resilient community energy group working in quite a tough part of Bristol. And they've managed to get planning for a 4.2 megawatt wind turbine in their locality, and they're keen to own that project. And so, but they haven't got the capital that available to them to be able to make that investment. So we've been able to work with them under a community energy funding bridge, where we come in, put the capital in for that project and get it built. And then the community group pay us interest and repayment on the bridge that we've put in, whilst all the profits from that project are put into good use with the community energy purposes, such as addressing fuel poverty, training local people into sustainable jobs and that kind of thing. So that's the kind of project that we're looking to use this capital for.
Great, thanks for that. And then my final question, which I'll ask each of you for as short an answer as you can do. It's a big question. So for Monica first, if there were one ask you could make of policymakers in order to facilitate this huge challenge that we have in terms of hitting net zero, what would it be?
Mm-hmm. I always respond to that kind of question with two asks: planning and grid. These are two things that, if they were allowed, facilitated, could really allow transformation to net zero. Especially grid is a huge challenge in the UK. We're seeing connection.
So this is access to the national grid, isn't it?
It's access to national grid. If you're developing a new project, you need to have a ability to export the power to the grid. And we're already hearing about people being provided connection dates in like 2029, 2030. This is really late, and we don't have time. So yeah, grid and planning, I would say, really allow those to flourish.
Great, thank you. What about you, Matthew?
Well, I think I probably agree with Monica largely on that, but if we need a third one then I think particularly at the moment, and it's something that we've been feeling probably for about 5 years now, would be a transition of the way the wholesale market works for electricity. So currently, the market trades on a marginal basis. So there are half-hourly auctions, and the last person to bid in their capacity wins the auction. Everyone gets that price. And because gas is the most flexible resource on the grid at the moment, then it tends to be the gas price which sets the power price for everybody, which, as you can imagine, and as we're all experiencing at the moment, is causing really big problems. But that's particularly the price spikes at the moment are horrendous for the country as a whole, and is pushing people into fuel poverty, which is obviously a bad thing. But even looking back over the last 10 years, where those price signals and the volatility actually prevent new capacity being built. And so I feel that in a period where there needs to be wholesale change in the energy market, something where there's a price signal which is led by capacity rather than the marginal cost. So you're looking at 15-year picture rather than a half an hour picture would be the responsible thing to do. And coincidentally, currently, our calculations suggest that would probably, if the whole thing was on a capacity market basis at the moment, we'd probably be saving between 15 and 18 billion pounds a year off of our electricity bills, with the implementation of new renewables and the migration away from natural gas. So yeah, I think there's a number of wins there, and probably now there may be the catalytic environment now for that to be considered, and certainly we're lobbying within the energy sector to look towards capacity rather than marginal pricing.
Yeah. Okay, well, thanks very much. And hopefully that's been a really good introduction for the people on the call. So my colleague Richard, who's a senior manager on the corporate finance team and who was the deal manager on this, is going to kick us off with the very first question from our attendees.
Yeah, hi, afternoon everybody. Thank you for that from Thrive. I think that last question is probably one you could do a whole webinar on, Matthew. I think a lot of content there. The first question we've got is on the 2021 accounts. There's I noticed from the 2021 accounts that both your turnover and profits had dropped. I believe you put this down to the weather affecting the amount of wind. How is 2022 going? And is the exceptional weather affecting you? And just in case you haven't seen it, Matthew and Monica, Katrina has popped a couple of answers in the chat, which you can communicate through that as well.
Right. Okay. Shall I take that one, Monica?
Yeah.
So there were two factors affecting last year's performance. One was indeed the weather, in that I think it was the least windy year we've had for 10 years. And the majority of our portfolio is wind generation, so that had an impact on us. But in addition to that, there we had 3 gearboxes at our site at Caton Moor, which is a wind farm just outside Lancaster, which needed replacing. And because of various different COVID and EU issues, then the supply of those gearboxes was much slower than we'd liked. So we had a substantial period of outage whilst those 3 gearboxes were replaced. So that was the other contributing factor to last year's performance. And additionally, what we do is we hedge we manage our power price exposure. So we sell electricity into the wholesale market, and the way we manage the volatility in the wholesale market is we sell for between 6 months and 2 years ahead. So we know what price we're getting. We know we can manage the business under those prices. And what happened, hands up here, was as we climbed out of the COVID lockdowns, and prices, the energy prices went down a long way. They more or less halved during the COVID lockdowns. And as we climbed out of the COVID lockdowns, prices returned very quickly in the September, October of that year to levels that we'd seen before the COVID crisis. And we thought, well, that's a good place to lock in the energy prices. And that was too early, it turns out. So effectively last year, we were selling power at the post-COVID levels rather than the levels we're seeing today. Oh, but sorry, the second part of the question was how's this year going? Yes, as reflected in the offer document, this year we're very much on budget for the first 5 months of the year, and yes, we expect variability month to month. So yes, the generation isn't as high as a normal July, as you'd probably expect, but the balance over the year is still a very on budget picture.
Great, thanks for that, Matthew. The next question we have is around the director's valuation. Ollie's keen to understand what assumptions are used, etc. Now that is covered in some detail in the offer document, so you can have a look at that. I think it's around page 34, it's in section 7. Matthew, are you able to just explain kind of big picture how the director's valuation works and what are some of the assumptions that you use in that?
Yeah, okay. And it'd be nice. Shame Katrina can't be logged on for this one. But yeah, so in terms of, the reason for providing the director's valuation per share is to give, because we're conscious we've got a very diverse investor base and a lot of our investors won't have the financial skills to pick up our annual report and decide, have their own view on what the company's worth. So we try and provide an idea of what the value of the shares, effectively the value of the future pipeline. And so within that, what we do is we've got a financial model which captures all of the projects that we own and operate or we're funding currently. So only the ones that we contractually have the rights to, not the speculative pipeline, effectively. So just the ones we've got the contractual rights to. And we look at what we anticipate they're going to do financially over the next 20 years. And that's a combination of making assumptions around the operational costs of those projects, how much electricity they're going to generate. But very important driver on that is the power price. So currently about 50% of our revenue is made up of the wholesale electricity price, which we hedge, as we mentioned earlier. But because none of us have a crystal ball or are able to actually predict what the next 20 years of electricity prices are going to do, what we do is work with industry experts. So we buy in reports from people, from teams that spend their whole day analysing what oil extraction's happening globally, what gas prices are doing, where stuff's coming from, which fields are being opened up, where our electricity is going to come from in relation to targets and policies and everything else. And they come up with a bandwidth of outcomes, of projections for energy prices. And we put those energy prices into through our financial model, which reflects what we anticipate our projects will be generating. And then we look at the value of the business effectively from the profit that the portfolio we anticipate will generate over the next 20 years. But as Whitney said, there is a much more coherent description of that in the offer document.
No, that's great, Matthew. Thank you very much for that. Rich, for the next question.
Yeah, just on that, there was a comment. Sorry, Mike, can you hear me?
Mm-hmm. Yeah, we can.
Yes. There was a comment from Katrina just to provide a little bit more context for the director's valuation, which was saying that the generation is based on 5-year historic averages, which was one of the key points, and then it's discounted at a rate that reflects the cost of capital and risk of the company. Okay, so back to the questions. So we've got one here, which is, what do you think the current policies of government are going to mean for the renewables future? I don't know if there's any in particular you want to talk about in terms of the environment that we're seeing, in terms of the talk that's come out of COP maybe.
I mean, I think that what's really changed in the last sort of 3 to 4 years is alignment and acknowledgement and the really landing on the need to address the carbon intensity of the economy. And so the net zero strategy, which covers all sectors, the energy strategy, which obviously covers the energy strategy, but also the security of supply strategy, effectively, which was pulled together in the early part of this year. There's a lot can be debated around the edges about the speed of hitting the ability of us to hit the targets and the exact mix of technologies and the cost of delivering it. But what is a fundamental building block of all of that is that there will be the need for a material amount more renewable energy in the system. It's the only way that the system's going to be delivered. And how that sits beside nuclear or carbon capture and storage, fossil generation, that's a debate. But the overwhelming need for more renewables isn't a debate anymore, and that's really changed in the last few years. And so that to me is the critical element. And to be honest, the wider elements and the degree to which how quickly nuclear will or won't be deployed is kind of noise within that system, because renewables will be the fundamental, the core of the energy system. In fact, I would argue that energy policy becomes renewables policy over the next 15 years. So that's the important bit for us, and we're particularly in our as a relatively modest player in the sector, it feels like we've got ample space to grow and develop and contribute within that renewables trajectory.
If I can just add very quickly, I think the huge role on this also local authorities and the kind of local governments level as well have to play. Most local authorities have declared climate emergencies, and then what follows on that is they are looking at what they can do in their local areas to deliver real change and support real projects, and to use their land in the right ways, to encourage projects on the planning side as well. So that kind of local policies as well, I think, is good to see more happening.
Great, thank you. The next question is from Colin. With energy so expensive, what returns do you expect during the current inflated energy pricing? So Matthew, you talked a little bit in your answer about last year's performance, about how you do lock in prices. So maybe you could just elaborate on that in terms of what it might mean for 2022.
Yeah, so we've locked in prices for the next 12 months already. So in terms of this 12 months, then the picture that's described in the IM is very much the picture we expect, subject to the generation being what we expect. So, but what the current outlook is that so for the last decade, effectively, power prices have hovered around the £50 mark, £50 per megawatt hour, so 5 pence per kilowatt hour on your bill at home. Currently, prices around £250, so 5 times higher than they have been for the last decade. But the long-term projection is that the prices will return to that sort of £50 kind of level, with this blip caused by the Ukraine crisis and all the horror that goes with that. So what we're projecting, and again is captured in the IM, is that we will be participating in part of that rally, but because of the way we hedge, we won't see the extremes, but we will benefit from that rally to a certain extent. And I think it's quite important actually to reflect that that renewable energy has a genuine role to play in pulling down those energy prices if we're able to do that within the market mechanism. Last week there was a CFD auction, contract for difference auction, and projects were bidding and being awarded 15-year contracts at about the £55-60 mark, which is, as I said, a fifth of what the electricity market's trading at the moment. So if we're able to unlock the renewables to a greater extent, then we can see that it has a real role to play in stabilizing the energy prices and pulling them in the right direction.
Excellent, thank you. So next question is, how hard will it be to achieve more onshore wind schemes through the planning process?
I can take that one. So it's quite interesting to see what's happening in every country, Scotland, Wales and England. right now. So there's lots of projects happening in Scotland, more also in Wales. Only a few projects happening in England, and that is driven by kind of local plans or lack of in terms of development of onshore projects. UK has the best resource in Europe in terms of wind speeds and the flow of wind. So it really is, the feeling is a lot more could be achieved in UK if planning and grid were allowed on onshore wind. And there's some amazing projects happening, like the project Matthew mentioned, where a community near Bristol is developing already developed and now in construction of the largest UK onshore wind project, and yeah, we were very proud to support it. And the other thing I should say about onshore wind is that it's not just about putting more turbines; it's also putting taller turbines. So actually, what you might have is less wind turbines, which is kind of more efficient, and a slightly bigger, which actually gives a lot more proportionally a lot bigger output. So I think that is the direction probably where it will go.
And I think it's important to say that the current issues with planning are limited to England. So in Wales and Scotland, the planning position for onshore wind is much more normal, shall we say, than the rather odd situation we've got in England. So there continue to be a healthy pipeline of wind projects coming through in Scotland and Wales. It's just that onshore in England is currently challenging, not impossible, but challenging.
Mm-hmm.
Great, thank you. So one question which I'll answer from John: how do the new shares compare to the existing ones? Are they more of the same? In short, yes. Thrive Renewables has one class of shares. They're called ordinary shares. There's about 22.8 million in circulation at the moment, and the company's expecting it might issue between 2 and 4 million shares in this offer. The next question I'm going to ask Monica. Someone has asked about tidal energy and whether Thrive has considered investing in tidal energy, because obviously it looks like a great idea on the surface. Oh, no pun intended, but actually what are the issues associated with tidal?
We have had our own moment with tidal. Can't remember, Matthew, was it 16, 17 years ago?
Yeah, it's 2007. Yeah.
2007, right. It was a project we have. We were a small shareholder project in Strangford Lough, in just off Belfast, which unfortunately, it needed a lot more R&D and a lot more innovation kind of support. So after that project was acquired by Siemens and take it to the next level, we kind of felt we're not the right people to be investing in the early stage of wave and tidal. But that's very much I like the idea. It makes sense if someone comes with the right technology and it's a proven technology. And becomes more scalable. I think we very much will be looking at this. I was very encouraged to see that the technology secured its own CFD auction in the CFD auctions. Matthew mentioned its own tariff. So I hope that this will become another kind of technology in UK which makes the most of the natural resources we have.
And I think that's maybe a helpful sort of point just to make there is that. So the way that we run the portfolio is that we have the majority of our capital in proven technologies, doing routine generation, so the wind, the solar and the hydro that we have within the portfolio. But that stability, or relative stability, affords us the opportunity to do a bit, have some to make some more innovative investments as well, which is where the previous investment in marine current turbines came from, where the investment in the geothermal project sits at the moment. And then once those projects stabilise and become normal business effectively, then that affords us the opportunity to invest in more innovation. So so I think tidal is something we would have a look at again, but the challenge is in terms of the power price required is so much higher than the conventional technologies or the conventional renewable technologies that it's challenging to get involved with currently, but it's not to say we won't in the future.
Excellent, thank you. So next question relates a little bit back, I suppose, to partly what you're saying about planning, but in particular how Thrive engages with communities with new projects. Is Thrive committed to working with communities to create relatively small scale renewable projects? And then a bit of a question about scale. So large scale projects, whilst achieving economies of scale, can result in negative landscapes and impacts on communities. So I think it's a question about how you engage with communities when you're putting up new projects.
Because there's probably a few questions within this, or yes, going back to our mission, working with communities on projects is part of our fabric. We investing in projects, we like to understand who our neighbors are. So we do try to understand who what thoughts the local community have on projects that we building. We try to organize things like open days so people can come and see the project, ask questions about it, meet us in person. And also we started a few years ago a community benefit program, which means that we provide grants to community buildings around our project. The first round of this program was so successful, we decided to run this every year. And we've, I think, had quite a few launches of that, and that's also been very useful, kind of engagement program, which we're learning more about what communities need, and also helps us to think about our projects, how we best build them in the future. So that is an important aspect. Another aspect is we actually provide funding to some community projects, like the one that Matthew mentioned in Bristol, with Ambition Lawrence Weston community group, and we've done quite a few of those community schemes where we funded community projects. The question about the scale, when we did fund larger commercial funding to projects, we expected them to perform commercially as well. So looking at the scale, tends to be from, I would say, $500,000 investment upwards where we can fund. For the very small schemes, if they could use our grants, then that was, I guess, the only way that we could engage with the smaller project. I think there is a need for the smaller scale, not just on community funding, but also on commercial projects like private wire, rooftop, solar. When projects are very small, sort of between 100,000 and $500,000, there is not that many options funding, perhaps, and it is something we're also looking at. How can portfolio financing can work for projects in the future. But I really want to encourage community groups for thinking big and take also the opportunity of what renewables can offer, and do go for scale, do go for larger projects. If we want to achieve real transformation, we want communities to be part of that transformation. So do look at bigger projects as well, because they do provide a bigger impact. And we often say, small projects take just as much time and kind of project as bigger schemes would. So do encourage communities to talk to developers and work on bigger schemes. Matthew, have you got anything else to add to?
Yeah, I guess just to character, so in terms of the investment range that we tend to invest, it tends to be between $500,000 and $20 million into one project. Mm-hmm. And in terms of size, then on a wind farm basis, that's a single turbine, a small single turbine, going up to probably a sort of 10 turbine site, something like that, just to give people a flavour of the kind of size of the projects that we invest in. And I guess what's I think that when we're all looking at just what a big difference, or what the hill we've got to climb with achieving net zero, you can forget about the smaller projects. But actually, more than 30% of the UK's current renewable fleet is less than 20 megawatts. So it's not just about the big offshore wind farms delivering net zero. It's about what we can do within the landscape, commercial rooftops that we're investing in. So it's mixing and matching for the system to make it work. So there's space for both the enormous projects, which are utility built, as well as the more modest scale, independently built ones, like the ones we interact with.
Great, thank you both for that. We are coming up to the end of our time, but I would love to squeeze in just one last question, probably for you, Matthew, but if you could try to keep the response quite short, because we've promised people that we'd let them go. Why is Thrive still small after nearly 30 years when you have been relatively successful? Should you not try to attract more investors?
Yeah, maybe we didn't try hard enough to attract new investors. But yeah, I think that really it's about the relationship we try to have with the investors, that we do want to keep the door open for an individual who wants to invest just £5 in the company to make it happen. We've chosen not to go down, let's raise money from the institutions in London, let's not just be pension fund funded. We want to build a portfolio where there's a connection between the people investing in it and the assets that are built. And I guess, that has ultimately curtailed our growth. But I must confess, having been here for 16 years, it doesn't feel like we've been twiddling our thumbs too much. But yes, we probably could have grown faster if we got a different capital structure. But that capital structure for us is a key part of our ethos.
Great. Well, thanks very much, Matthew. I think that's a really good note for us to end on today. So thanks for taking the time, to you, to Monica, to Katrina. I thought it was, great to see the variety of questions. I know that we did not get through as many of the questions as we would have liked. So just to let you know, the email address for the corporate finance team is going to pop up at the end of this webinar. It's capitalraising@triodos.co.uk. So if you have more burning questions that you'd like to put to us and the team, please do. But thanks very much for your time today.